Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone and welcome to the Security Token Show. I'm your host Kyle Sonlin and with me is my co-host Herwig Konings, and we're coming to you from our studio here in sunny Miami, Florida.
I'm fired up for another episode, Kyle.
Absolutely, let's do it. So today, we're going to be giving you the latest security token industry news, telling you about the latest new security token offerings and updates, and then give you a breakdown of last week's trading activity in the secondary market. And then from there, we're going to finish off the show with our weekly main topic discussion, which this week is a discussion about non-fungible tokens being security tokens. But of course, we can't get started without first doing our Company of the Week awards, where we award two companies for making the biggest moves in the industry last week. So without further ado, who is your pick for this week, Herwig, for episode 81?
Well, Kyle, last week we announced that the Bank of New York Mellon was getting into the blockchain game. So BNY Mellon, it's one of America's oldest and largest banks. They've got over $2 trillion in assets under management. And that's why when they announced that they're getting into Bitcoin custody, and now they're actually also creating a whole digital asset unit, I had to acknowledge this major step. They plan to create a multi-asset digital platform focused on developing what they say is the industry's first multi-asset digital custody and administration platform for traditional and digital assets. And I like that they specifically say traditional as well. BNY Mellon could easily get into the stablecoin game and who knows what else. So this type of growing validation from major banks shows us that blockchain has made its way into the banking enterprise world for good. And for that, Bank of New York Mellon wins my Company of the Week. Any thoughts on this, Kyle? Otherwise, I'm looking forward to hearing more about your winner.
Yeah, I think that's a great choice. BNY certainly is a heavy hitter that will deliver tremendous value to the industry and can certainly assist in building credibility and the network effects that are needed in order to offer a real viable solution for asset issuers that are really looking for an institutional alternative to the traditional market infrastructure. So that's very exciting. But turning our attention to my Company of the Week this week, I selected Document Security Systems, who, after announcing nearly $40 million in fundraising over the last month, has announced a joint venture with CoinStreet and GSX Group to launch a global digital exchange ecosystem for the issuance, trading, and settlement of tokenized securities using its own blockchain solution. So that joint venture plans to apply for a digital securities exchange license here in the US while using GSX, their Stacks blockchain, for the settlement and clearing of the securities on the platform. So it seems like their first step is going to be trying to get license approval. And if it's a securities exchange license, we certainly know that could take a long time and is a long road ahead. But with a big war chest of resources through Document Security Systems fundraise and focus on the blockchain space, as well as the coordination of some really experienced blockchain and fintech players, I think is definitely a great sign of things to come, and some really exciting stuff coming from Document Security Systems and the rest of those guys there. Pretty exciting stuff, I'd say.
That's a huge partnership, yeah, for sure. We covered that a little last week, and now that you mentioned it, they've raised a ton of money. That's incredible.
Yeah.
That's a huge amount for any company in this space right now. So congratulations, Document Security Systems and the partners involved.
Absolutely.
Now, let's get into the news, but of course, before I do, I want you all to know that the articles that we cover on this show, they're sourced from stomarket.com/news, but they're also available for reference in the about description of the podcast or, on the Security Token Show Medium blog whenever you ever want to read into the news for yourself. So, without further ado, let's get right into it. Our friends across the pond in France want to increase the spread of digital currency and blockchain adoption by creating a unified approach and, a regulator for all of the EU for crypto assets and digital assets in general. So Robert Ofele, who's the chair of the Autorité des Marchés Financiers, which is the AMF, actually basically the Canadian equivalent to the SEC, said actually in a recent quote, first, this would be the best way to guarantee a level playing field in the EU. Second, as this regulation is brand new, it is easier to provide ESMA with the competence from the outset that if this is considered at a later stage. Moreover, it would make sense to gather all the expertise within the same authority since the cost of entry in the crypto world is quite high, end quote. So we couldn't agree more. It's more important to create a regulatory framework that clearly defines and states what a digital currency is in order to allow for issuers and parties in the industry alike to create their own products and services with legal clarity and certainty. So without that certainty, issuers will not be comfortable to enter into that legal gray area, limiting the innovation and growth. So let's see how the EU ultimately addresses this. And in more positive regulatory news, Thailand is amending their current regulatory rulings for digital assets to improve their clarity and create an international standard. So one day, we envision maybe that the EU and Thailand, as well as every other nation, will be working together to establish that international standard, but one step at a time. So the catalyst of this decision was the influx of cryptocurrency investors and users, apparently. So Pinpraj Chakapa, the chief executive officer of ERX, who is building Asia's leading digital assets exchange, that they say, said it best, quote, more investors will turn to investing in security tokens in the future because traders of security tokens will be now more protected by the law, end quote. So I'd say Thailand is ready to catch up to other leading Asian countries in the security token industry thanks to this move. And it seems we have a common theme going on here with regulatory bodies this week, as yet another country is attempting to clarify and define digital securities. Italy's equivalent of the SEC has been supposedly been speaking with some major players, as they quoted, to discuss regulating STOs. So it should be interesting to watch and play out. I don't know about you, Kyle, but I can't wait to add some parts of beautiful Italy to my portfolio. Let the Italian tokenization revolution begin. If you're in the country, reach out to your regulator and voice your support and opinion. And to close out our list of regulators making changes this week, we saw the Nigerian SEC and the Central Bank of Nigeria work in conjunction to create a regulatory framework on digital assets as well. So the future is definitely here. Every regulatory body will inevitably define security tokens, as we can see, igniting the globalization of these capital markets. And that's at least 3 countries this week making moves towards a big change. And the need for EU regulation continues to be clearer and more supported throughout. Now, over in the U.S., the SEC made some changes too. Now, 36 senior officials of the SEC, they have the power to subpoena individuals and companies versus only previously 2 officials under the Trump administration. So this means enforcement cases, many more will be happening than before. And for those that raised money illegally via an ICO or participated in that era, with violations, you might be in trouble. The SEC is definitely not messing around. And to back that up, the SEC is showing its confidence in its lawsuit against Ripple for violating securities laws with XRP. It's a massive case given the size of the cryptocurrency, and Ripple has reportedly spent over $690,000 in lobbying costs, stating that it did not commit any fraudulent activity. So in lieu of this case, pretrial settlement did not end up occurring, so there will be, a virtual pretrial conference, they say, held February 22nd, but the punchline seems to be simple from the SEC. They have no plans to settle with Ripple right now. And moving into company announcements, we saw Japan's SBI keep making moves week after week. Now they're reportedly looking to make crypto a core part of their revenue stream, just after recently announcing a major joint venture with SFMG to launch a security token exchange, in Japan. So SBI founder and CEO Yoshitaka Kitao said his firm would definitely turn the venture into a core earner for SBI, while adding his firm is considering large-scale mergers and acquisitions in the space. So keep an eye out on SBI in Japan, folks. And another company in Japan is also getting heavy into security tokens. I couldn't find much else about Japan DX is what it's called, but the firm has supposedly entered into an agreement with Land Management Co. to invest $150 million into the Kazakhstan economy using security token infrastructure. So that's obviously a pretty big deal, and the goal is clear: increase access to Kazakhstani assets and companies to Japanese investors via security tokens. So we'll have to keep an eye on this in Kazakhstan as well, now that it seems, with this move. And real estate issuance platform Solid Block also announced a new partnership last week. This one is with Atlas One, a Vancouver-based digital investment platform that was recently granted registration as an exempt market dealer by the British Columbia Securities Commission. So the firm will now feature real estate deals from Solid Block to create access to Canadian investors. More examples of cross-border deals are being possible thanks to security tokens like this, so I think it's an awesome partnership. And Hedera Hashgraph, which is an enterprise-grade distributed public ledger technology, last week announced that you can now use their tokenization services without getting involved with the smart contract. So the novel provider allows you to issue tokens using their platform without actually, getting your hands dirty. Mance Harmon, co-founder and CEO of Hedera, said, quote, tokenization of a huge range of assets will make traditional financing operations and interacting in marketplaces faster and less costly, fundamentally changing the existing processes for purchase order financing, obtaining obtaining loans for working capital, buying insurance, securing inventory financing, and invoice factoring. Tokenization will provide the foundation for enterprise to use distributed ledger technology in routine business transactions, thus driving significant acceleration in enterprise adoption. And of course, we agree with him, and it seems like Hedera now has made it even easier for enterprises to consider using security tokens and tokenization with their distributed public ledger technology without having to get involved in smart contracts. Great stuff. And CurrencyWorks has also announced that their security token platform can now accept Bitcoin as a form of payment. So a Bitcoin bridge to security tokens is always a good thing, especially as an all-time high price leads to some investors now, of course, wanting to diversify into some other things. So smart move by CurrencyWorks there. Not every issuance platform supports Bitcoin payments directly, and some issuers are looking for this feature. So. And Neufund out of Germany also announced a suite of new platform upgrades, ranging from user experience improvements, they say, to new front-end capabilities. So get that full breakdown by Omar Faridi on Crowdfund Insider. And finally, we have a new entrant into the space called Labs. And I actually couldn't seem to find a website nor figure out where they are from, but they claim to be a full-stack security token protocol and platform and supposedly have a licensed exchange. Wow. The article is in Asia Crypto Today, so maybe that gives us a clue as to where they may be. But overall, they have a very ambitious roadmap spelled out in this article, enabling every capability you can really think of in the space. So we're going to be on the lookout for news about them, or anything further we can learn beyond what seems to potentially be a focus on real estate, though it seems applicable across all securities, according to the article. And now for our last section of the news, where I cover last week's op-eds and educational resources. And we start off with an article from Polymath's blog called 10 Things Broker-Dealers Should Be Asking Themselves. So naturally, they address the benefits and efficiencies of security tokens, but I think it's great to see some content targeted at broker-dealers. All of them do need to start asking themselves these questions about security tokens. And next up, we're on week 5 of Peter Gaffney's Tokenize This series. Each week on Medium, he covers a new topic idea of tokenizing something else. And this week, it's website domains and e-commerce, or as he calls it, digital real estate. He's talking about using security tokens to make it possible for investors to gain access to a larger pool of quality websites for investment through fractional ownership, allowing, of course, for greater opportunity to diverse among several different website domains rather than deploying all capital into one, and to be able to seamlessly resell website ownership. And it doesn't hurt if there's a yield-generating e-commerce business on top, of course. And that's another great use case, Peter. Keep them coming. And the National Law Review also came out with an overview of what the new SEC Chairman Gary Gensler means for crypto. And the article highlights, I think, worth mentioning here that they think he won't change much regarding the Howey test, and that they'll continue to use that to enforce for regulations, enforcing the regulations. But he will potentially be tackling, in a positive way, they say, towards the growing issues around custody and ETFs for the market. So nice to hear some insight from the National Law Review there, if you care. And finally, we have some further articles on the whole GameStop ordeal. One article talks about the Financial Industry Regulatory Authority, that's FINRA, which recently released its annual risk monitoring and examination activities report. So among other things, the report states that FINRA will increase its focus on risks associated with app-based platforms with interactive or game-like features that are intended to influence customers as a result of this whole Robinhood chaos that locked up users from buying certain stocks at one point. So FINRA says this may break its rules for broker-dealers requiring to have the best interests of their customers at heart. So let's see if this ends up resulting in any action for Robinhood or not, or any other players. And to close it off, CoinDesk released an article for the need to go to instant settlement in order to avoid fiascos like GameStop. So it's a great breakdown by Nicolas Day and a great validation for security tokens. Good stuff. And if you're interested in that, hopefully you caught episode 79, where we also break that down. You can catch the main topic discussion on YouTube in the Security Token Show channel anytime you want if you did miss that. And that's the full rundown of the industry news from last week for you lovely listeners. Kyle, what industry events we got coming up?
Awesome job, as always, Herwig. We really all of these news and events, there's just so much going on in the space. And regarding industry events, we've got one webinar coming up on February 23rd at 12 p.m. Eastern Time. It's being hosted by Polymath and features 3 securities attorneys who will talk about security tokens. We've got Dr. Nina Luisa Seidler, who is the partner at DWF Germany. There's also John Salmon, who heads up Hogan Lovells blockchain practice. And last but not least, we have Oshua Ashley Clayman, who is the senior counsel at the U.S. head of fintech for Linklaters. So definitely check this one out if you want to get some free legal opinions from some lawyers and hearing about how the blockchain industry and security tokens all mesh together. Thanks for putting that together, Polymath. And that's about it from our upcoming events, but we do have the weekly breakdown of our security token show on Clubhouse at 5 p.m. on Thursdays. Last week was our first one, and it was a major success and lots of fun, I'd say. We hosted Bruce Fenton from Watchdog Capital, Douglas Borthwick from INX, Richard Johnson from Texture Capital, Nisa Amoyles from A100X Ventures, Jamie Finn from Securitize, Jacob Sparks from Amona, and Arnab Naskar from Stalker on the panel talking about liquidity and some of the recent news. It was a heck of a lot of fun, and we had a total of 70 listeners joining us throughout the evening. So thank you all for coming out, and hopefully I'll catch you again on Thursday. Please remember, if you can submit any industry news or events or anything that you want us to cover on the podcast, as well as participating with the community, just hop on to stomarket.com/news and we'll cover it on the show. So after that amazing Clubhouse conversation, don't forget, again, we're doing it weekly. We'll see you at 5 p.m. on Thursday. And so now I think that we want to dig into the new security token offerings. And this one that I found this week by real estate entrepreneur Vernon J., who has announced a security token offering with a unique use case focused on improving local communities. He calls it Equity Coin, and the goal of the security token offering is to create a platform for communities of color to invest in local affordable housing projects cooperatively to help inspire growth in the affordable housing sector, which is currently in a shortage across the country that is only exacerbated by the COVID-19 pandemic. Each equity token with the ticker EQTY represents a fraction of ownership of the company's portfolio of properties that it acquires and develops over time. The firm is going to begin investing in multifamily properties in the East New York section of Brooklyn, but it plans to target 4 additional markets in the future, including South Los Angeles, North Miami, Newark, New Jersey, and Oakland, California. I'm happy to shout out Vernon and his team for making an impact in local communities and that have been hit hard by the pandemic. And I'm actually very inspired by this use case that builds a more equitable financial system for everyone while also assisting those in need. So well done to Vernon J. and team.
Awesome project. Love that, and great use for security tokens. Wishing a lot of luck to this.
And our second security token offering of the day is from security token issuance platform Relio, who is kicking off its RST security token offering. The token, which represents both equity and a revenue share of the company's business, is a multi-chain asset, meaning that it can be issued on Algorand, Ethereum, and the Stellar blockchains concurrently. This is actually a super interesting development in the industry, and it really reaffirms the interoperability of security tokens versus the traditional crypto or digital asset space. And so since the value of the token really comes from the financial asset, which in this case is that equity and revenue from Relio, it makes sense to be blockchain agnostic to allow for the flexibility based on current trends and investor demands. I don't have any details specifically on the raised terms yet, but I'm super interested in this offering because of the cool facets that they're working on, and I'll keep you updated in the future. And the final shout out in our market update segment before we dive into the stats of the market is a shout out to Omar Faridi, who has a great summary article on our January market report, as well as a few other security token research reports that we've put together over the past couple of weeks. He's always doing amazing work to amplify our industry, and we always appreciate the job he does to credit our hard work. So thanks so much, man. You're amazing. And again, as always, as we jump into the security token market stats, all the news and pricing data is sourced from stomarket.com. We've got it auto-updating there on the site, stomarket.com. And when we talk about the total security token market cap, we hit $677 million this week, which officially breaks the all-time high market cap. By my rough estimation, our previous all-time high was right around the 650 million mark, and now we're well past that at this point at 677, and it's only going up from here. This week's run was led by a 30% pop by T0, which is now trading at nearly $7. And if it keeps that pace, we may see all-time highs very soon, as the token has only been above $8 a few times since it began trading in 2019. If it can break the established all-time high of $8.48 that we saw in August, I'm sure that many of the vocal members of the community would be absolutely ecstatic, as well as all the institutional investors that they've brought onto the platform over the last 12 to 18 months. We'll see if they can keep the momentum going. Aside from that, we had another strong week from the blockchain capital, which is now at $6.50 and climbing up nearly 10% this week. So they've been performing very strong, which is great to see because, again, as we've talked about on the show, with those kinds of venture capital portfolio companies, you really need to look at the full portfolio to understand the value there. And blockchain capital has done a good job of disclosing its holdings as well as its NAV values. If you want to learn more about that, we've done a main topic on how to value a blockchain fund. And to close out our tokenized real estate properties, we didn't really have a ton of big movers to highlight this week, but I guess the real only highlight was from Andover, which was up 9% this week, which is great to see, while the low light was from Fullerton, down 5%. Everything else was somewhere in the middle, up 1% or 2% or down 1% or 2%. They're holding their value pretty well. And all in all, it was a strong week from the market, again, led by T0. But then aside from that, everything else was either flat or struggled on the trading volume front. So I tend not to cover anything if there's, really low amounts of volume because the price movements are really hard to make any kind of conclusions off of. But hopefully some new tokens will end up lock up soon and we can get some new listings or some new investment and really have some fun things to talk about coming soon. And that's a wrap on the market this week. So I've got to say it's pretty nice to be back in all-time high territories. As I mentioned on Twitter, I'm actually running a competition right now to guess when the market's going to reach that 1 billion mark. So follow me over there and give me your best guess on the first day that we're going to reach 1 billion in total market cap. And I'm going to give the winner a shout out here on the show. But with that, I think it's time to dive into the hot main topic this week, which is also very hot in the community right now, which is whether NFTs are security tokens or if they're just plain old commodities.
That's great stuff. All-time highs are always a great thing for the market. I have no idea when that 1 billion mark is. I hope it's freaking tomorrow, but we'll find out soon enough. Love to hear all your guesses, listeners. And yeah, this is a very interesting conversation. I think it's important to first remind, of course, everyone here that we are not attorneys. We are not securities attorneys. We are not giving out legal advice here. But instead, we are going to try to break down what all this hype is about surrounding non-fungible tokens, NFTs, and how these digital assets relate to the security token framework. So there hasn't been any SEC clarity on this front either, so really all of this is speculation. But with that being said, I think we should define some of our variables here. When we're talking about NFTs, we're talking about these non-fungible tokens. They're a vehicle you'd use to represent a specific asset like a collectible or art or any unique item, most commonly with a very limited supply.
That's exactly right. The very nature of a non-fungible token is that it can't just be replaced by another one, and it can't be split into fractional shares. Think of it just like a collectible baseball card. The value of the asset is predicated on the fact that it's a unique item, and the time of printing, along with the quality, scarcity, and outside demand are key factors in determining what the market value of that thing might be. And so NFTs are trying to take that proof of ownership to the next level by creating digital assets whose supplies are originated on-chain. So in that way, we know exactly how many of each NFT has been created and exactly who owns it, pretty much totally eliminating fraud from these industries by creating a system of ownership that's so easy to verify from anyone around the world. So, Herwig, what are some of the leading use cases for NFTs so far we've seen in the market?
Well, it's definitely one of the larger industries, and I think maybe the most intuitive example of an NFT is, digital art. So platforms like Super Rare and So Rare, they created full digital marketplaces for graphic designers to sell their digital art, including images, short videos, and a lot more. There are a lot, even trading card games. You may have heard of Gods Unchained, which sells packs of NFT cards that a buyer can then use to compete against their friends in tournaments. Kind of similar like Pokemon or Magic the Gathering, and or maybe even recently Hearthstone, they've done a lot of traditional collectible scene type stuff. But this time it's all digital and NFTs. And, maybe another one that maybe people have definitely heard of was back in 2017, Crypto Bull Run. We actually saw the NFTs known as crypto kitties, collectible cats whose name to fame was causing severe blockages in the Ethereum network due to the demand for them and the strain on the early version of Ethereum. So that's right, people. Let that sink in. Digital cats as NFTs strained the Ethereum network.
Yeah. Well, while CryptoKitties might have actually been seen as a joke at the time, it's actually done about 29 million in sales to over 90,000 buyers to date. So even more impressive than that, the company behind it, Dapper Labs, is also behind NBA Top Shot, which is a marketplace to buy and sell trading card versions of top highlights from NBA games each night. And NBA Top Shot has become insanely popular with over 5.6 million in sales in just the last 24 hours. They've done about 75 million total sales since the company launched in just October. And it's kind of like trading cards, except you might own LeBron James's famous block in the finals against the Warriors instead of owning his rookie card. The NFT space is blowing up with nearly 150 million in sales to date across dozens of industries, from gaming to art to music. I mean, that's a big business.
Yeah, that's absolutely. I mean, actually, Dapper Labs, that company behind CryptoKitties and Top Shot, just announced a $250 million fundraising round at over $2 billion valuation to scale their current marketplaces. So on top of course, probably improving their purpose-built NFT blockchain that they have, which, of course, CryptoKitties and NBA Top Shot NFTs are both issued on that.
Yeah, I believe it's called Flow is the blockchain that they've built out for that. But now that we've laid exactly what NFTs are, I think maybe it's time to dig into the financial mechanics behind art as an asset and maybe how that translates to the digital world. So, Herwig, could you walk us through that a little bit?
I can try, So in the context of tokenized art, I think there's really two ways that you should be looking at it from a structure perspective. In the digital world, I'd say it's pretty easy. We can take a digital collectible and assign its ownership rights to a digital, of course, non-fungible token, which can then be sold on a marketplace to the highest bidder. This is really no different than what you'd see in the traditional world. Just instead of a certificate of authenticity, we're using a digital token on a public ledger. However, when you're trying to create a digital token that represents a real-world physical collectible, I think it doesn't get so simple. We still need to bridge the gap between the tangible item and the blockchain-based asset. How else could you know that you have true ownership of it? And so in order to do that, an issuer normally would create an SPV, that's a special purpose vehicle, which would then acquire and own and sometimes manage, if you will, the asset. And from there, an issuer could sell shares of the shell company to investors, which gives them exposure to the underlying asset, in, of course, a fractional way. It's very similar to a system of steps that we've seen in the structure of individual tokenized real estate properties, as well as, since it's an incredible, versatile, and proven method, of course, to unlock liquidity, in traditionally illiquid assets like collectibles.
Yeah, right. So, I mean, we could have two types of assets really to consider here, right? One that's just digital proof of ownership via an NFT, and then one that's actually direct ownership of an asset through what's essentially an equity investment. So remember, folks, we're not lawyers, but this differentiation is incredibly important. If you own your artwork outright, you're really just purchasing a unique good, like a rare pair of Nike shoes or a painting from Art Basel. However, when you're purchasing a business interest in art for the expectation of that future profit, like in the case of owning fractionalized shares of an art piece, then you definitely need to make sure you're adhering to all applicable securities laws.
This separation, I think, is really critical. It dictates the rules and requirements around who is allowed to purchase these tokens, of course, where the user can sell their tokens, and how an issuer handles the liability for the asset. So NFTs, which are really just collectible goods that are not publicly verifiable, can be traded on marketplaces anywhere without requiring those regulatory licenses that security token platforms need when they trade securities. So, however, it also proves that incredible value of security tokens to open an opportunity for investors around the world to invest in real-world art itself. At the end of the day, when you own an NFT, you're owning a digital painting or a collectible that you could see or access anywhere, while owning a physical artwork can be a unique viewing experience that is very difficult to replicate virtually. So, however, real artwork can easily sell for tens of hundreds or even millions of dollars, and there is a huge demand for fractional ownership of a classic asset class that simply has been seen as revered for centuries.
Yeah, I mean, security tokens pave the way for that increased access by opening investment to economies globally while bringing the cost down through fractionalization, which is not necessarily an option in the NFT space. If fractional ownership was available, it too might begin to look like a security, as investors really would only be purchasing that small share in the pure hope of future profits, which is a big no-no for the SEC if you're not following those securities laws.
Yeah. Ultimately, the line will always be drawn there by the Howey test. That's the case law used by the SEC to determine whether something is a security or not. And one of the major prongs for something to become a security is that there is an expectation of profit. So NFTs that don't follow securities laws but represent real-world collectibles start to potentially blur that line and could be seen as security tokens. You can definitely be both. So that's why Curio Invest in Switzerland, for example, issues security tokens representing their collectible cars like their tokenized Ferrari, not just NFT tokens that anyone can go and buy and trade anywhere.
Yeah, that's a great example, Herwig. I think there's one resounding benefit in the NFT space that I know will eventually permeate into the traditional art space and many of these other collectible industries, and that's really counterfeit protection. Many collectible industries such as art, fine wine, and others are plagued with fake and counterfeit goods that just dilute the supply of quality goods available for investors and for enthusiasts. And so with NFTs, that serial number on each token is embedded into the blockchain at the creation of that token, and which one day may become the gold standard for verification of authenticity, no matter whether we're talking digital or physical art.
Yeah, that's just a general great use of the blockchain, right? We know that CurrencyWorks is working on a platform like that for art. And however, though, it must be mentioned that the transaction can be separate from an ownership ledger, right? So again, we blur the lines for NFTs and security tokens in that regard. Ultimately, I think it's a fascinating space. And, Dapper Labs' fundraise marks yet another unicorn leveraging blockchain in new ways. So they've clearly proven a model that's going to grow to massive heights. And other firms will deploy NFTs in ways that could trigger security token trades and end up being seen as that by regulators. So get, great legal counsel if you're exploring an NFT project.
Yeah, that's always great advice. And with that, I think that's about all that I've got in the NFT section.
I think the same for me, Kyle. It's still a burgeoning space, and we'll continue to keep our eye on it, of course, and update you with all the latest developments. But for now, I want to thank you all for tuning in and listening to another episode of the Security Token Show, and I hope to catch you again next week on Tuesday or Thursdays at our Clubhouse session at 5.
Yeah, please submit any news at stomarket.com and also grab the latest pricing data there from Security Token Market. Again, feel free to reach out to us on Twitter or LinkedIn with any questions or feedback. And thanks so much for listening. Talk to you next week.